I think if you look, closely, what was disappointing for me was the services economy has opened up meaningfully in the last 3-4 months, and demand for Manrega in December 2021 was pretty much the same as December 2020, about 24.7 million. And this is, 35 to 40% higher than a typical December. So we haven't seen the reduction in Manrega commensurate with in opening up in the services economy as was hoped. That, as services open up, a lot of these jobs will come back. Now, to be fair, the aggregate job numbers that CMI reports have ticked up a little bit in the last few months, right? So again, if you go back to what is the total employed population in India in absolute terms, we've begun to slowly approach the level of March. But what this misses is that, remember, the working age population is on its pre-pandemic path. So the economy may not be on its pre-pandemic path, but the working age population is. So there are all these people who've entered the workforce in the last 2 years. And so our sense is the employment to population ratio, which is what we need to look at just in the US. Don't be fooled by unemployment rates. Labor force participation around the world has fallen, as it has in the US. So to get a holistic picture, the focus must be employment to population. And that was 38% in India pre-pandemic. That's now come down to between 35 and 36. It was 36% in December. That gap is essentially the fact that all of these people, the working age population has increased. We will need, between 20 and 22 million jobs that need to be created, to get that ratio back up to 38%. So really, I keep saying, let's not hold out hope for private consumption, recognizing this backdrop, that there isn't much excess savings, the labor market's taking time to heal. We really need to look for other growth drivers. Hopefully, those will create jobs. It's the jobs and the income certainty that will hopefully propel consumption, and that will take time to recover.
A quick follow-up question on the job side. What do you think is happening that is preventing that sort of scarring from healing to some extent? Is there a change in the nature of sort of jobs that are coming into the market? What's your sense of what's changing on the employment side?
It's an excellent question, Ira. And I think the early hypothesis is, when we talk about this uneven recovery, what we've seen is that the formal sector increased its footprint quite sharply during the pandemic at the expense of the informal sector. But remember, the informal sector is much more labor intensive, right? The formal sector is much more capital intensive. So essentially what's happened is, because of this forced transition from informal to formal that COVID has triggered, output in India has become more capital intensive, right? And so you can produce the same level of output using fewer workers. I'm being simplistic here just to make the point that as the capital labor ratio improves. Now, there are many nuances to this. Moving to, for an activity moves to the formal sector, in the medium term, this will be productivity enhancing. There are economies of scale. Large firms can compete better in global markets. All of that is true. But in the near term, the transition has to be managed, because the near term implication is that you will have job losses because activity has become more capital intensive. There's one other element to consumption, just to bring up very quickly. We speak about the consumption pie, but the division between urban and rural consumption, there was a belief that rural consumption would remain very strong because we've had 2 strong monsoons, and agricultural production has been high. Some signs, the RBI in its latest bulletin speaks about some softness in rural consumption. I think part of that can be attributed, to what I call the terms of trade effect, both the external terms of trade and the internal terms of trade. So with oil prices moving up, fertilizer prices moving up, input costs for farmers have gone up. And so their margins have come under pressure. This in a way is because of higher global commodity prices, and that's impinging on income growth. And then if you look at food to non-food inflation, the internal terms of trade effect, over the last 9-10 months, non-food prices have grown faster than food prices. So whatever income you have, your purchasing power as a farmer is now lower. So I think it's the combination of both these terms of trade effects that may be contributing to some softness in agricultural consumption in particular.